briefly about inflation. I know we have a lot of discussion of that topic. Are you seeing a moderation?
Yeah, we certainly have been calling for that over the last few months, and yesterday's print obviously, I think, verified people's viewpoint. We're in that camp that we think the Fed is done with rate hikes and the hiking cycle is over, and I think yesterday's print kind of reinforced that.
What about oil? Oil rallied a little bit yesterday on hopes that the Fed is done hiking interest rates. Do you see, but oil has suffered lately.
Yeah, I mean, when we saw the invasion of Israel by Hamas, we saw that risk premium sort of come into oil, but that's dissipated completely. We're now below $80, where we were over $80 prior to October 7th events. So it's kind of interesting to see the strength of fundamentals kind of get sidetracked by, I'm going to call it, some sentiment and general concern about maybe where the demand picture might be in 2024 if the economy does slow down.
And I know this is going to come up on the show, but gold, where are you bullish on gold right now?
Yeah, we feel very constructive on gold in the sense that history shows over the last 40 years, gold performs very well. I think the average is about 34% after significant rate hikes. When you start to go into rate easing, you see that kind of performance. So we're kind of looking for that in 2024, where kind of the headwinds of a strong U.S. dollar and rapid rate hikes will dissipate, and now will be overtaken a little more by, I guess, geopolitical risk, as well as this general strength on the demand side for gold. Maybe
we could put up a 5-year chart for gold. I suppose you could argue that gold has done fairly well given the rapid run-up in interest rates. Typically, that's bad for gold.
Yeah, you know, we have these conversations with clients where they say, my God, gold has done nothing. Why are you excited about it? And I actually tell them, well, I'm actually encouraged that gold has been very resilient, let's call that at 1,800 and more recently around 1,900 U.S. an ounce, given all the headwinds of strong U.S. dollar, rapidly rising rates, not only nominal but real rates. So I think the setup is quite good for gold. Once those things start to disappear and go into the rearview mirror, that kind of opens the door for gold, I think, to break through 2,000.
I guess the other side of the coin, though, is gold hasn't really done its job this time round of protecting people against inflation. I mean, it's not really up from 2020, for example.
Yeah, I mean, it's up from 3 or 4 years ago, yes. It's been relatively flat since pretty much the beginning of 2022 or mid-2021. But I think when you consider all those headwinds, again, U.S. dollar, strong real rates, those things are now in the rearview mirror, and I think that kind of opens the door for gold to break through. I'm not saying it's going to 3,000, but I certainly can see it find a new floor of around 2,000 U.S., and I think that's a very important psychological level.